All right, welcome everybody to our weekly live closing bell show. This is Eric here. I've got Max. You also know him as Unusual Markets or Trades and Gains. You know me as Eru. We are here on a weekly basis to go over the closing bell, what's coming in on our Stack software, discuss a little bit about what's going on in earnings. We've got some important earnings to discuss today and a little bit of the news. We obviously want to make sure that you guys understand what's going on in the the macroeconomic scale. So, with that being said, let's jump right into it today so we can get some extra time for our earnings later. Max, I know you've got some news about the bond markets, the yields, what's going on a global scale, and we were just discussing it a moment ago. But go ahead and let us know.
So in the bond yields, we had a spike today. If anything above like 4.6% is typically a panic zone for people, and we've been hovering around like 4.52 to 4.32% recently. But today, the 30-year Treasury yield surged above 5%, hitting levels that haven't been seen since 2023. So the reason we had that nice little pump going into earlier today and then that heavy sell-off is 30-year hit 5%, and a weak Treasury auction today also pushed it to 5.1%. So, and the 10-year is nearing that 4.6% oh crap level. Anything over 4.5 isn't good for the markets. You're always going to see a heavy sell-off. The response to this is a sell America sentiment is starting to grow. Investors are selling bonds, bucking the usual flight to safety patterns that they're known for. Going to gold bonds, and that kind of stuff is typically where you'll start to see that. And signals. This is going to signal a rising concern over U.S. fiscal health, not just inflation. So one thing to keep in mind about this is it's not just about inflation. This is also going to have everything to do with our overall financial health, which if you've been tracking over the years, it has never been doing that well. And when you kind of throw with how inflation's been doing, doesn't really help. And another point is we had Moody downgrade the U.S. to a double A1 rating, which is which is a whole is like getting an A on a test, getting it downgraded to a B because we're typically a triple A rated. Um, Moody's credit downgrade reignited those fiscal fears earlier in the week, and loss of tariff revenue and Trump's proposed 4 trillion tax cuts absolutely worsen that debt outlook as well. Because I believe he did push a bill through where tipped wages will, what's up, Dylan? Will be able to be tax exempt moving forward, which someone's going to have to eat those costs at some point. And it's most likely going to be us. And then we also have a market narrative shift. Citi sees a shift from good trade news to bad fiscal reality. So the thing that we're taking away from that is um, it's no more about, oh, look at these like trade agreements that are getting set up that are going to lighten the blows. At the end of the day, we're in poor financial shape as a country. So it doesn't really matter how many discounts you give someone at the dollar store if they can't afford to shop at the dollar store at the end of the day. You could be like, this is 50% off. It's only 50 cents. And they're like, I have a penny. There's still not much that they can do with that penny. Analysts warn this could trigger a broader repricing of U.S. risk across assets and currencies alike as well. One thing to note here, steeper yield curve is going to equal fiscal fear, not growth, by the way. So usually a steeper curve signals growth, but now it reflects debt and policy concerns. And with that, the reaction is U.S. global confidence in the U.S. is weakening. Investors are now exploring non-U.S. alternatives at this point, and even though treasuries are still a global anchor, policies are repelling capital inflows. Again, this is another point where you don't have to understand how to read these reports. It's just putting two and two together. When we look at consumer sentiment and we look at like consumer confidence, we're looking at levels we haven't seen in about 4 to 5 years for some of these numbers, um, which is a concern because that shows that the average U.S. consumer is not doing well. And guess what? Most of these companies are relying on what? The average U.S. consumer. So the big thing today with our market news is their recession fears are definitely looming and very much alive. Rising term premium shows investors demanding more to hold long-term U.S. debt, and fiscal inflexibility may mean weaker recession response if one hits as well. So that means if we do get hit with a recession, instead of a swift response to get us out of it, we could be looking at uh, what is it? Paddling up or going up a creek with no
Up,
paddle.
down
Uh,
creek with no power, right? Up
yeah,
stream.
done. Yeah, a creek with no paddle. So that is not. But according to some analysts, the bond sell-off wasn't like unexpected. That's the thing.
Yeah,
Just because of that underlying fiscal health that we have in the U.S. currently, it didn't really come to a shock for most investors.
yeah, yeah. We definitely have. I mean, obviously, I remember hearing that our our national debt, in order just to service it, is like $2 trillion, and ultimately it's just going to continue to balloon. We're in this debt spiral, and one of the things that we are noticing as well is there is a plan to ultimately devalue the dollar, because right now the dollar was too strong in recent years, making it very hard for us to, with a strong dollar, it's easy to import stuff, but it's very hard to sell to the rest of the world. So the dollar now is below 100 DXY, you guys can see here. And, it's one of those things where it's expected to go down a bit. We had a bit of a distribution pattern here, and it could be headed down further, about 10 to even 20%. So we'll see what happens with that. With a weaker dollar, yes, it does mean that assets may rise, but we also have to keep in mind the economic outlook for the entire the global economy. So keep an eye out on that. If you guys are in our chat, if you guys are watching on YouTube, go ahead and comment stacks for us. Let's see who's in here. That way we get an idea of what's going on. And also, if you guys have any suggestions for what you want to look at for today, please drop in some tickers so that we can get those on our watch list to discuss for you guys later. The markets today had a little bit of pump earlier in the day, and then we just saw this swift little drop from the top down. We're already down 1.8%, down 10 points on SPY. So, a lot of that having to do, again, Moody downgraded us over the weekend. We saw a little bit of a reaction to it, but not too much. But I do believe that we will continue to see a bit of that selling off if we don't find ways to correct that type of fear. Just bringing in more uncertainty into the markets, you may imagine. All right. Today, we've got some things to go over with you guys. We've got our earnings watch list up here. After close today, we've got about 20 minutes till close, so we'll go over Snowflake, Zoom, which we are on right now. Let's talk about AMSC. We'll talk about tomorrow's. What should we look at tomorrow? I'm looking after close. I definitely want to look at Autodesk, Intuit, Ross, and Workday. Maybe we could take a look at Advanced Auto Parts, see how
Yeah.
that's doing. Maybe even BJ's, and even maybe Ralph Lauren. But I want you guys, if you're in the live stream, go ahead and comment what you guys want to see. That way we can get an idea. We also want to review real quick. Home Depot reported yesterday. We also got Target that reported earlier today, and we also had TJX. Let's take a quick look over at their charts. So we have HD for Home Depot. Home Depot did discuss, so their miss on earnings wasn't too significant. It's like 1%. Their revenue was up just a little bit. But at the end of the day, there was a very interesting tidbit in their report talking about how they were going to absorb the tariffs and, instead of passing it on to consumers. Again, Max and I were discussing this. This seems more like a political move. Eventually, they will have to pass on some of those costs down to the consumer. There's no way as a company for them to keep that revenue, keep that bottom line. This is just a political ploy just to make sure that, hey, they show up on the headlines. Oh, Home Depot is going to do a great job and absorb, as a big corporation, absorb what is being passed down to consumers. But I do believe down the line it will trickle down back down to us. It's highly improbable for a company at that size to absorb that entire tariff shock. The only other thing I could think of is maybe at some point they might come to some sort of deal with our government to say, hey, we do this much volume, we want to make sure that you guys, you know, as a company, we can't absorb it all. So give us a better deal. We'll still pay some tariffs, but give us a better deal than what the current, the current 30% or so is. So keep that in mind. The next one, we just had Target, TGT. Target, also a big drop. Earnings reported down 19%. Revenues up just a little bit. Again, the consumer is starting to struggle a little bit. That's just the main takeaway that you should have from what we're seeing here. It's been happening. We've all seen rising costs. Yes, inflation has fluctuated a bit, maybe come down in terms of not being as high during the previous presidency, but at the end of the day, it's a percentage of inflation compounded upon previous costs still means higher prices. It doesn't necessarily mean that we've had it go down. So keep that in mind. We saw Target pump up a bit and then drop quite significantly. You can see from there, from that high of that wick down to the bottom, that's a 12% drop from the close of yesterday. You can imagine it's down about 7 or 8%. So, pretty significant.
And they were on the opposite end of the spectrum because tariff turmoil was like the main thing that drug them down, with higher import costs from China, 30% duty impacting their margins. They'll selectively raise prices, but it's cautious about customer backlash at this point. And that mitigation, this might not come from our government, unlike Home Depot, because they're going to go straight to vendor to do negotiations and shifting production out of China. 60% in 2017, 30% is what they're currently at now, and their goal is to be at 25% by the end of 2026. Ironically enough, they're also facing DEI backlash. There are a bunch of people who are boycotting Target because there's a pullback on diversity and inclusion initiatives, which again triggered that consumer backlash. It went viral on TikTok, Twitter, and pretty much every other social platform that your mom watches reels on, especially from activist groups like Rev Al Sharpton's group as well. So Al Sharpton got involved. That probably did not help them whatsoever. And then also, discretionary spending is obviously weakening. Same store sales is down 5.7%, with transactions being down 2.4%, and the average spend per visit's down 1.4%. So home decor, apparel, and other non-essentials are still very much under pressure for them, and 5 months of falling consumer confidence added to the decline as well.
On the other side of that, we've got TJ Maxx stores. Discount, you have to remember, so we've got regular consumer and Target, Walmart, the basic things that we are purchasing, and then you've got these discount stores. So you can think Dollar General, TJ Maxx, and Ross stores and things like that. While they both fall under consumers, you have to remember that a lot of it also comes down to how they're placed, how they're viewed in terms of their pricing. So here we've got TJ Maxx companies. They actually beat revenue and earnings just a little bit, but we did actually see a little bit of a drop so far. So that's not good in terms of outlook for our economy. Generally, when you do see, when prices are going up, are people flocking to these discount stores? Do you see Dollar General? Do you see the dollar store getting more traffic because of it? People going from name brand type of things to the generic versions. In those situations, it's actually going to boost the bottom line of these discount stores. So here with TJX, you'll see, but here TJ Maxx parent stock follows after it, warns of a profit shortfall on tariff costs. So again, tariffs are starting to make that impact. We're starting to see it being reported in most of these companies' earnings. Like we said in the last, live session that we just did, the outlook. That's what we're focused on. Whether or not they beat earnings, right here they had a double beat on both earnings and revenue, but at the end of the day, it's their outlook saying, hey, tariff costs are going to cut into our bottom line, and at the end of the day, it's something that we don't have any full control over at this point. So that's why the stock has dropped just a little bit. Okay, so
Inventory.
real quick, I saw Baidu as well from earlier today. Let's take a look at that. BIDU. Ooh, big drop as well. Had a pop earlier in the day, dropped quite significantly. Huge wick up top, down about 10% now.
Ooh. Their operating income fell on its face, 18%, with margins contracting 300 basis points to 14% as traffic acquisition and cloud infrastructure costs lifted operational expenses to 17.5 billion RMB. Sales, marketing, and administrative spending climbed 10%, while R&D costs eased 15%. So it looks like really they're just operational costs and how much they were expecting to take a hit for came in a lot more aggressive and hot, and there isn't enough that is easing or leveling out to offset that increase, obviously.
Yeah, so in terms of the chart itself, we've got these, if we zoom into this lower area right here, this blow off top, dead cat bounce, came straight back down below previous support. We've kind of got that same look here. We've got a huge blow off top, bit of it went a little bit higher here, but at the end of the day, this has characteristics of a distribution pattern. Would not be surprised to see it come down toward this 73 range again and potentially come a little bit lower. So if they're struggling just as well, there's definitely some considerations that China, right, we got rotations into other global stocks because the US isn't doing as well. But there's reports that China's not doing so well either, right? Especially with all the tariff, the trade war, and things like that. We'll have to see what ends up happening with these. Let's jump into these quickly of our upcoming. We got Snowflake coming up. Dylan here has shouted out Snow 55 210C September. Yep, there was a print for later today. Let's jump into our stacks really quick and take a quick look as to what came in with Snow.
Snow. Okay.
We got some calls being sold. Premiums.
Snow. Okay. Now I need this to pull up on my computer.
So we do have a buy here for later this week. Let's see what he's talking about. The 19th.
I'm trying to pull analyst sentiment right now for it.
Got a little bit of buying on the equities side of it. We've got a lot of these calls being sold over the course of the last week.
Oh yeah, they're just selling calls but 220? That's aggressive.
September 2027. Okay.
Yeah. So it looks like revenue is we're looking at 1.01 billion for a 21% year over year increase. And from $828.7 million in the same quarter. For EPS, we're looking at 0.21, which is up 50% from the prior year. We're looking at product revenue guidance between 955 million and 961 million, which would reflect a 21 to 22%. So again, when it comes to any type of guidance, you always want to land either in the bottom, the middle, or the top. If you land anything underneath, it's typically not a good sign. Even if you land towards the bottom, you could get a negative reaction. So ideally, you want to see around like 958 to 962 to be a positive, to have it be a positive report. Key points we're going to be watching from them: AI integration, partnerships, including a multi-deal year with Anthropic and the acquisition of Datavalo. So again, this sounds kind of Cisco-ish to me, where it's talking about an acquisition being a key point with AI. Profitability metrics are going to be key as well. And we're looking at customer growth as well. As a previous quarter, Snowflake had 580 customers. And this is a 27% year over year increase if they hit that. So those are going to be the key points we're watching for Snowflake today, in terms of what you're going to want to look for out of that report, or as you start to see reports come out.
Looking at the chart over here, it does have these characteristics of a accumulation zone, but keep in mind, earnings does not necessarily have to play along with that right away. It could, down the line, I could definitely see Snowflake coming back up over 200. We've got three pretty small gaps down below and a huge gap above here at that 194 range up to 226 from their earnings back in 2024, where they had this huge drop. They had a huge double beat too on that. So, Snowflake, again, with the AI craze, things like that, one of the big questions people have is the AI craze over, or are we just getting started? Is it, with AI taking over on certain things, there's always conflicting views on it, just like with the tech bubble. One of the big things that you can understand is with, what ends up happening in these situations is whenever we have new technology, a lot of people jump in heavy, a lot of investors pump up these stocks, but the issue is the fact that the infrastructure for these are not completely built just yet. So what ends up happening, so one of the big examples I like to use is if you look back on something like Boeing, if I go back on the monthly, let me clean this up a little bit. We go all the way back to the beginning of time of Boeing. You'll see, okay, people jumped into the stock, airplanes doing great. Everybody's going to fly, everybody's going to travel, but the stock came into an accumulation zone and then had a huge run up and then drop back down. Because the idea here, with any sort of technology, you can think radio, television, airplanes, computers, that's where our tech bubble came from. And now the new big one is AI. Is the infrastructure fully built for everybody to take advantage of it, for all the money to start flowing in it, or is it still just hype? And so we're still fairly early in terms of AI when you do consider it. So there is the possibility that we will see some relaxation back down. Investors that have confidence in whatever technology it is going to scoop it up and then push it up further, and it'll continue to go through these accumulation and distribution zones. So you always see these cycles up and down, up and down, up and down as we go higher. And that's just the nature of the markets. That's the nature of what's going on in terms of, new technologies and things like that. So Snowflake, I think here, if you look at the big picture of things, if you're a long-term investor, very likely we're going through that type of an accumulation zone to head up further in due time. But again, it could bounce down. If I drew a box right here, we're basically, until we break out of this zone between 105 up to about 233, till we break through this zone, it can go back and forth for quite some time. So keep that in mind. All right. Next, let's get into it. We got 5 minutes left. Zoom. Let's do Zoom really quickly, and then ASMC. ZM for Zoom. Accumulation zone just well. The thing with Zoom was the fact that we definitely had, just like during our COVID, our pandemic, they had the infrastructure to operate, so it pumped all the way up. It's fully distributed back down as people went back to work, as people went back to the office. Looking like a accumulation zone again down here, but we're not in the clear until we break up above that $89 to $90 range. We've got some wicks up here, but very likely this is the range that we are consolidating in. We do have some strength. This could be a last point of supply before we head back up further. So I will say, looking pretty good as a accumulation zone. Let's take a look at our software. Yeah, go ahead.
In terms of nothing's really standing out. They're looking at 2% year-over-year growth for revenue. EPS, we're looking between the range of 129 to 131, which is below the 135 reported in the same quarter last year. Enterprise growth, AI initiatives, and product diversification are the three key points that they're banking on to make sure that this call goes semi-well. So it'll be interesting to see what happens there. Yeah, nothing really interesting. Honestly, I'm not a huge fan of this. I used Zoom at work and it was horrible. Zoom phone sucks. I'll just say that.
Yeah, in terms of what Stacks has to show, we do not have very much activity. It is not something I would suggest you playing options on, simply because it looks like there's not very much volume, there's not very much open interest. You're going to have to deal with some higher bid-ask spreads, so probably not advantageous in terms of buying and selling these options. ASMC, let's jump into it real quick before we got 3 minutes till close. Oh, what? One of those, did I type that right? ASMC? AMSC.
AMSC.
AMSC. AMSC.
There we go.
Am I having trouble? AMSC. I don't see anything coming up. Do you?
AMSC on Stacks or just the chart?
Yeah, on Stacks.
I don't think I see anything for them.
Yeah, I don't see anything right now. Okay. Nothing in terms of that. Let's take a quick look at the trading view. Yeah, semiconductors, a bit of a accumulation type of thing. Right. As you guys look at more charts, you'll start to see these too. You'll see the rounding top coming back down, rounding bottom headed back up. There has been quite a bit of buying near the bottom. Don't know if that might have just been a short squeeze down here. Trading that $20 range could be something worth getting into some equities for, but I would not suggest the options game on this one, which a lot of you guys are here for. So AMSC, see if there's anything. American Semiconductor, it's gone up quite a bit over the last few months, so keep that in mind.
Got a lot of gaps in it though.
Yeah.
It's very gappy. I don't like it. And it looks like it doesn't have a ton of volume going into it, which kind of makes it'll make the earnings reaction. If it's negative, it'll amplify it, unfortunately. And if it's positive, because there's no volume really, it's not really gonna. So this, I think to Eric's point, this is a great equity play, but in terms of options, unless you're just looking for a 10% move and get out,
No.
if it goes well, it's just not worth it at the end of the day.
Reminder, guys, take a look at your open interest and volume of the options. I know a lot of the newer players, they look at something, hey, maybe a certain option play happens to be cheap, fits with what they want in terms of their risk profile or what their portfolio is able to do. But you got to keep in mind, if there's nobody willing to trade that specific option with you, most of the time you're going to get screwed in terms of that bid-ask price. So, to be protective of your premiums instead of getting into those higher risk type of positions. So keep that in mind. We're getting into the closing bell. Just closed right there. Let's peek right back over at SPY, see what happened at the end of today. Still near the bottoms. We had a little bit of movement, some sell-off. But again, that's just the markets. I would say it's the market's reacting to the Moody's downgrade a little bit more, even though it didn't really quite react earlier in the week when we expected it to. And keep in mind, there's the common saying, buy the rumor, sell the news. We're going to use Peloton as an example in a moment, but the news that was reported with Moody's, it actually went the other direction the day after as soon as we opened during Monday. So, we like to say news is hype. Stacks, if you go a little bit deeper into stacks, you'll see what the institutions know, and that's what we're here to help you guys out with. Get an idea of what Stacks has to say, and teach you guys how to use our software so that you guys can use this to your advantage. And we always like to have more people using Stacks because, again, in our community, the more eyes and the more ears that we have, the more likely we are to find these things. Because, again, it's a lot of data. It's a lot of noise out there. And it's up to us to go through together to filter it for you guys. So we'll peek back over at, so we just had Snowflake just closed. We'll see. It's just going to take a little bit for it to fully develop. Seeing it up just a little bit. Let me delete this big blue box.
Okay.
So keep in mind, for most earnings, they usually report about 15 minutes after the bell. What you'll see right after close is you'll see a lot of manipulation. Generally, what I would like to understand what's going on, the algorithms, the big institutions are looking for people's stop losses. They're hunting people's equity, trying to take them out. A lot of times you'll notice too that price might go heavily in one direction, and then after earnings is reported, it'll head in the other. So again, the first 15 minutes after close, got to take it with a grain of salt. I understand definitely if let's say you're in calls and you see the stock tank right after close, makes your heart beat a little bit faster. So you have to keep in mind, options, there's a reason that you can't sell those options till the next day anyway. But nothing's set in stone until that report is actually fully out. And then you have to keep in mind these companies will do an earnings call later in the day, usually a few hours later. And that's where they get to reiterate certain things that have happened, what their outlook and their guidance looks like for the future. And that can either pump or dump a stock again, depending on what they have to say. If their CEO, CFO says something that the market doesn't digest fully and doesn't understand or doesn't quite like, it could head down. If they have some new partnerships, they've got some new technology being released, or some new work that they've been working on that they haven't released until just then, you could see the stock head further up. So we'll give it about that 15 minutes. Until those 15 minutes, we'll come back and take a look at these ones that we made our little predictions for. Let's head on into the next one's Thursday. So tomorrow, I don't see anything in here I really necessarily want to look at. We got analog devices, BJs, advanced auto parts. We could take a peek at that. Lightspeed, Nanox, Ralph Lauren, ATAT, CSW Industrials, TD Bank, and then Arquit. Most of these. So one of the things I'm looking for, are they companies that are more so market movers, right? Are they going to influence the direction of the bigger indices? Are they going to be able to tell us something about that industry? A lot of these are smaller players when you consider it. So if any of you guys in our chat want us to go over those, let me know. We'll go over it for you guys, but we're gonna jump to Thursday after close right now. We got Autodesk, Intuit. Intuit's over here in San Diego, just a few blocks from me. Ross Stores, Workday, and I think that's pretty much it. We got Copart, Silvercore, Stepstone, Cavco, Lion. I don't think we need to go over those ones. So let's do Autodesk, ADSK.
Perfect. Snow just reported. Oh, wow.
Oh, headed up. Headed up.
Yeah, they smashed. They went 1.4 billion,
Ooh,
1.04 billion.
okay.
So they went
Just a little bit.
0.03 above, but one quarter EPS came in at 129 though. So I think that's what was the
Yep.
catalyst for it.
Okay. So we're headed up. We're headed up toward that gap above. We'll definitely see some resistance. We'll see if it's able to break through. We'll come back here into Snowflake in a little bit after we go through Autodesk.
Yeah. Autodesk not too aggressive, 13% year over year growth. For Rev, EPS is looking at 14% year over year. Um,
Pretty
Key
steady looking
factors.
company though.
Yeah.
Pretty steady the way that they're growing.
Oh yeah, I mean they've been around for a minute, so I wouldn't expect anything less.
Just respecting the trend line, headed up. Nothing crazy about it. This could have been a little bit of accumulation zone from 2022 to beginning of 24. Um,
Oh yeah, I see that. Okay.
let's see what Stacks has to say. Not very much going on. We don't see anything this year. Everything's
This
from
is
last year.
this is one of those old white people companies. Autodesk, Cisco Systems,
Yep.
like no 35-year-old is out there going, I need to buy some Autodesk options and get some 1000% bangers.
Yeah.
Jenny requested Workday.
Yeah, we'll go over that in a moment. That's on our
Perfect.
list to go over. Yes, I'm just going down the list for Thursday after close. We got Intuit, Ross, and Workday for today for this.
Nice. Intuit should be a good one though,
Yeah, Intuit should be solid.
because they're like the Salesforce of accounting, basically.
Let's look into that. Oh, INTU.
But I guess it's interesting. It's like, what really moves them? Is it like peop businesses that are signing up to use their services,
Yeah, they're
or
very much business to business.
okay.
They have multiple products under there. So, for example, MailChimp is something done by Intuit. You also have tax
Hmm.
seasons. So, TurboTax is something that they use. So, they're very much the. I mean, also, they also have, business to consumer. So, you can obviously think you and I can use TurboTax, things like that.
Yeah.
And the thing with something like TurboTax is it's this little monopoly in terms of the tax preparation software. They've lobbied so that people are actually forced to use it. Um, yeah, one of those companies. Continued growth looks a little bit like Autodesk. Um, you know, pretty decent, solid company. You can see they usually hit their earnings. Had a few misses here and there. They pay a
Ooh.
dividend as well.
Credit Karma. Performance
Yes.
of Credit Karma, especially in the context of consumer credit trends, will be a focal point for analysts in this call. But that's not good because I'm pretty sure a report just came out. Like Klarna just lost like 136 million last quarter, I think.
Well, but the thing is that so Credit Karma isn't necessarily the one lending, right? So they're not the ones actually lending people money. They're just a middleman service to say, hey, I'm sure when they get you to sign up for a credit card or get you to sign up for other services through their platform, that's where they're going to make a little bit of a cut through, through those other companies. So it's probably MasterCard and American Express that are going to be paying them instead, right? So, um, one of those things where their business model isn't, I wouldn't say exactly the prettiest, but they do have quite a few things that are offered to people that are essential for them to use, right? So,
Yeah.
Klarna, yeah, the Klarna thing. You got people. Dylan just said people financing their donuts, their burritos. Pay your Chipotle burrito and four easy small installments. It's a sign that people are not doing as well as maybe markets are showing. And at the end of the day, you have Affirm, you have Klarna, Afterpay. There's a lot of these buy now pay later type of services that are being offered, and a lot of people talk about how it might be the newer generation. The newer generation is more likely to use these types of services. They're paired with something like DoorDash, and yeah, you're hungry, fine, split your payment up into four things. But Klarna has reported that they have, I think, 100 million of unpaid debt, right?
Yeah.
And while it is not exactly a credit card, it is still designed in a way of credit, of debt, right? So making sure that if you are signing up for those, pay your bills, guys. Come on, this is ridiculous. And if you can't afford to go and eat out, dude, go make a peanut butter jelly sandwich for yourself. Stop financing your Chipotle. Stop financing your donuts and these little things. It's one of those things of the what was it in psychology? It's the instant gratification. We see that a lot with these newer generations wanting the instant gratification, pushing it off till later to pay back. And I think it's gonna, it's a sign where our economy is going to somewhat be backed by some of, eventually has to be backed by these people, because they're the ones that are going to grow up into adults and the ones taking on the debt. So keep in mind though, Intuit's business model is not completely built upon something like Klarna and Affirm and Afterpay. So they, if they do see continued usage and people using their services, we could see, it's up to the number of users that they have and their reports. So Intuit, let's see, there wasn't very much in terms of the stacks side of things. We don't see very much going on in here. The last prints were in February, so quite some time ago. Both of them, one was a buy of puts, one was a sell of calls, so hard to tell. But 33 mil on that. That's pretty nuts.
Jesus.
Let's get into Workday for Jenny real quick, and then we'll do the last one I had was Ross, but that's minor. Okay, Workday.
11% year-over-year growth for revenue at 2.2 billion. EPS is expected to be around 199, up from $1.74 in the same quarter last year. Subscription revenue, which is big for them, is estimated at 2.05 billion, which reflects a 13% increase year over year. Key factors to watch: AI integrations such as talent rediscovery and document intelligence, restructuring efforts. The company announced an 8.5% workforce reduction, about 1,700 employees, to streamline operations and focus on growth areas like AI and international expansion. And speaking of international expansion, Workday continues to grow its presence in markets like the UK and Germany, contributing to its overall revenue growth as well. So those are the 3 points that you want to be looking at. Currently, it was trading at 271.05, I believe. No, 268.54.
It dropped a little bit, but
yeah. So it should be interesting to see what they have to say about AI initiatives, international growth, and then just like what their guidance is going to look like for the outgoing years, or for that rest of the year as well, because that's going to be, again, a huge Achilles heel for a company like Workday.
yeah. What's their outlook? What's their forecast? I'm not exactly loving their PE ratio at 140. That's pretty ridiculous.
Let me pull that. I can find their forecast in a second. Come on, load. There we go.
I mean, they've done fairly well in terms of beating earnings. They've only had, what, 2, 3 misses? So, good stewardship, good group of people leading the company. So that usually, goes in the favor of it continuing to make money, potentially heading up. Workday unveils Illuminate AI agents to accelerate workflows. So,
That's definitely needed.
yeah, you can hear my baby crying in the back. My wife's got him.
Let's see. I don't know. They might pull a Houdini and then just be like, we're not giving guidance.
Yeah, that's not gonna be good.
Because
That's not
I'm
gonna
like
be good.
Googling it right now for like their outlook, and let me see, WD.
Got some puts being sold earlier last week. Got a little bit of buying. That's about it, though. Let's take a peek back over at I know people want to see. Let's take a look back at Snow. See how far it ripped. Went right up toward that gap that I drew. Right, bounced right off of it. LUMN. Somebody just said. Just up. Big beat. Is it? What happened here? Retains infrastructure critical to its enterprise strategy.
Let's go,
AT&T
baby.
to buy Lumen's fiber business. That's it. AT&T is buying. Yeah, well, one of the things that let's also talk about this real quick too. During these times where again bigger companies are getting, the big companies get bigger, the small companies start to struggle. You will start to see, like we've seen a lot of stock buybacks from the bigger companies to help prop up their share prices. We will see acquisitions of companies, the ones that have been beat down, doing terrible, needs some newer leadership or needs the umbrella of a bigger company. So, for example, here you can see Lumen Technologies being bought out by AT&T. The one big headliner that I want to talk about is Peloton. Peloton's been going through this ugly looking accumulation for quite some time now. It's been completely beat down. So you see, and I love this little chart that I put up here, the psychology of Wall Street, where you see this huge pump up, right? That's almost exactly what we see right now. Pump up, euphoria near the top, people thinking this is the next new hot thing. This was during COVID where, everybody needed a Peloton so they could exercise at home. Have this huge drop and then a dead cat bounce. From there, we head back down into the denial, panic, capitulation, and anger phases where we have potentially some accumulation, but you got to keep in mind, are they truly buying? And then this little ugly little rally coming from here. This is a lot of times where if a company is able to survive or able to continue to stay alive, what you'll see companies acquire it, and companies look to acquire it. We had back here in 2022, 2023-ish, I remember there was talks about Apple potentially acquiring Peloton, and that created a pump up in its stock price and things like that. And we just recently, this last week, saw a bunch of Peloton purchasing in our dark pools and in the options, and we just had that rumor again. So the pump, though, wasn't quite that big, though. The pump was kind of, in my opinion, fairly mediocre. Huh.
Well, part of that pump came from they just had a new injection. Wexford Capital LP invested $764,000 into Peloton Interactive. This was just reported about 9 hours ago, mind you. And this is a new position for them as well. And this is during their Q4, so that's pretty interesting as well. It netted them about 87,000 shares. And other institutional investors have also modified their holdings. R Square Limited also purchased a new position in Q4, approximately worth 28,000. Russell increased its position in sales or in shares by 969.6%. So they now own 4,000 shares worth 35K. So it looks like they're in these like hedge funds aren't giving up on it. So they clearly must, to your point, know about some kind of acquisition. And I also did alert out like within I think a couple minutes of it hitting the tape, our stacks filter catching that move before. And I think if you wanted to just get it for a quick scalp, I think the high you would have been able to sell it at was around 80%. And that's for less than that's holding it for less than a session and a half,
Hmm.
because you would have sold it this morning at the peak before the sell-off.
Yep.
So definite, but the nice part is you have a lot of time on these contracts, July 18th of 2025, and they were only a $39 average. But I think last time I checked, they're around like $61 a contract right now. So you're still doing pretty good, because that's something you could throw 300, 400 bucks at and sit on it for a month and probably maybe be up 1,000 within a month if
I mean, I would
people.
even say you throw $300 or $400 at that, and then you're looking at what, 600 or 700 already. So you're already up $200 to $300 on a 310 dollars that you put in. Don't be
Yeah,
too greedy, especially in these markets. One of the things I would point out here is that it's a rumor. There's a very good chance this rumor. I mean, I will say the institutional investments are something to really that raise an eyebrow. In the
yeah,
past, when you had the Apple rumor, when you had these other acquisition rumors for Peloton, you did not see that type of buying. So we'll probably come back to Peloton in a few months. There may be upcoming news of some sort of acquisition. The thing about Peloton is they've got a lot of their own infrastructure out there. So people have the bikes, right? You go on Facebook Marketplace, there's probably like 25 people in your area trying to sell an old version of it. Um, the their items are out there. The issue is that their model isn't really making them money because unlike something where like Apple's got to sell you a new phone every 2 years, and get you back into their system to spend more money. Once you buy that Peloton bike, maybe you service it here and there. They have a subscription model, but people have found ways around it as well. So, if their subscription model isn't completely making them that money and people are no longer buying those Pelotons because gyms are open, you have, the exercise classes you can go to, you don't have to buy these anymore. That's leading into a bit of, you can see the demise of Peloton over time and it's headed back down. But it would be interesting to see because if there is a bigger company, imagine Apple or Meta or even like Microsoft coming up with some sort of fitness division that rebrands that Peloton bike in order to use as a part of their infrastructure. Get health data on people, encourage people to work out more and be healthier, things like that. That would be something where Peloton could benefit from. And it also leads into another thought of how the question here is also what would they purchase it at? What are they going to value it at? The issue here
yeah.
with Peloton right now is that if you look at all their previous earnings, they lose money every single earnings. They're not making money at this point. Their basic EPS negative 44. They don't have a PE ratio because they're losing money. Yes, at one point they were billion-dollar company. They're worth quite a bit. They're more than just a billion actually. So, um, their income statement you can see here on the quarter.
Oh, Jesus.
Their net margins always been negative over the last few quarters. They did have. I don't think they were ever profitable to be honest. -3, -4, -78 in 2022, -45. Last year they're a -20%. So again, that for every $1 million that they have, they're losing 200K. Come on, like what kind of that type of business is not sustainable over time. A lot of it has been pointed out as the stewardship. The CEO made a bunch of money during COVID, sold off shares, pocketed a bunch of it himself. So ultimately, to see this company being taken over by something was probably its best bet. And it also brings me into a quick thing. So again, if they're, for example, let's say Right now it's 646. If somebody purchases it and offers what 750, that's barely a pop, right? That's
Yeah.
right. That's technically a 15% increase on that. But for example, you want to think about Dick's Sporting Goods taking over Foot Locker. What's Foot Locker's?
They bought him for what, 86 billion or something? Crazy.
Yeah, and you can imagine. I can't think of Foot Locker's ticker right now. But Foot Locker, you can imagine. They they haven't quite innovated themselves. Yes, they still have their stores in the mall, but a lot of these companies, you can imagine, you shop at Nike, you shop at Under Armour, Adidas, these sportswear companies, even like Lululemon's got their own place. So people are not necessarily going in and trying the shoes on like we used to when we were kids. And Foot Locker suffered quite a bit. On the other hand, though, Dick's Sporting Goods has done a great job of maintaining their stores and actually getting foot flow and foot traffic, and bringing people in. There was a big shift to business to consumer, meaning that Nike and them were selling direct to consumer, but it started to take a small shift back toward these middlemen retail stores. So something like Dick's, and I think that's a good acquisition for them. But for example, Foot Locker was acquired at a price where it was above way above what their share price was trading at, and so that's why you saw such a big pump in Foot Locker.
Let's see. Overblown transaction raises concerns about slowing Oh, so one thing that it flagged though is it raises concerns about slowing momentum in Dick's Sporting's core business, but the company is committed to its original growth strategy with no planned delays or reliance on cost synergies. They're saying we believe they saw, to your point, Eric, an opportunity to acquire a business that's earning far below its potential due to current brand headwinds at Nike.
So here, Foot
So
Locker, Foot Locker, I found it. Jumped from 12 to 24.
a nice little 100%
on the equity itself, right?
on the equity. So imagine the options. Those went insane.
Yeah. And Foot Locker's been around for quite some time, but it's kind of just back and forth, back and forth. Right. Okay.
He was popular when I was a kid.
Cool. Thank you, Jenny, for that. Anything else, you guys? Drop any tickers you like. Comment stacks if you find these helpful. We love to do this for you guys, but we're always double checking to see if people are actually listening. I see there's 9 people still watching right now. Um, you know, trying to help you guys out, trying to look through these things. I love what Max does for you guys. He goes through, looks at the numbers, double checks what it looks like in terms of the outlook. He used to do this for his 9 to 5. He was a data analyst and help making sure what's going on with companies. So it definitely helps us get that insight in terms of those numbers.
Let's see, anything interesting come through? People are we're stacking NVIDIA puts today. Or not puts, calls today.
Did you see Michael Burry took out a huge NVIDIA put position?
Oh my God, I know. Well, he bought in. I think his only holding right now is like a solar company, I want to say. Give me some.
Yeah, he sold off of basically everything, and he's gone bearish on a lot of things. And remember, he's the guy from The Big Short. The one that shorted the housing, the housing or the entire housing market, made billions of dollars off of it, but was given a lot of crap for it. He also had some China bets from earlier in the year that he's cashed out on. New Trifine. Give me some confirmations to check my trade is correct or not. What are your trades? Let us know. Comment below.
NVTS looks like it's ready to make a move.
Yeah. What exactly is NVTS? Oh, it's
Whoa,
a
what
semiconductor
the hell?
corporation. Well,
It just got
Nvidia,
a
yeah,
Nvidia deal.
Nvidia just decided to collaborate with them. That's why they popped, though. They just popped. They're up
Yeah,
at
he
four
own
dollars now. Yep.
by the way, EL is the only thing Michael Burry owns now
Oh
after
yeah,
basically
Estee Lauder. People still need to look good during a recession.
But that's crazy. Like that is up 127% in after hours right now.
Yep. Some
Thank you, Los, for that. By the way, Los is a really good hunter of these kinds of things. He's one of the traders who actually got me into trading originally and like into the stock market. So he always calls me to give me like stuff to look at or tips and other stuff like that. He's been killing it too. He's given out like 200% trades, I think, a couple times or every other day almost for the last 2 weeks.
Yeah, one of the things I love about the trading community is, you have a lot of people to bounce ideas off of.
Yeah.
And it's one of those situations where, sometimes you need a second set of eyes because a lot of times when you go into certain things, you always have your own biases, whether it's from the news you've heard, whether you like a company or not. But being completely objective upon a certain, when you do your analysis, that's always very important because at the end of the day, the stock doesn't care if you like them or not. The stock and the price is going to move depending upon sometimes the fundamentals, sometimes based upon the hype, sometimes based upon the news. But at
Yeah.
the end of the day, it's always very useful to have people who have been experienced to take a look at their numbers, look at the charts, give an idea of where things are going. UNH,
UNH.
let's take a look.
So did you hear what happened with UNH today?
No.
So HSBC first off downgraded its rating and cut the price target. And then concerns arose from reports of payments to nursing homes so they were paying nursing homes to like what was it? UNH stock. They were like paying off nursing homes to like not accept people.
Oh, geez.
There's like something shady. Oh yeah, all right, here we go.
And
This is
the crazy thing is too, like, are we surprised? Really?
no,
That's
I'm
the
not, but
thing, right? You're
it's
not
funny though.
surprised.
Insurer paid nursing homes to curb hospital transfers. Like,
Mm.
imagine you're like in a nursing home, you're like, I need to go to the hospital. They're like, no, just take these pills, you'll be fine.
Yeah,
Just go to bed for a couple days.
creating bigger issues for patients so that they end up in that system and spend more money. And it's I wish I could say I'm completely shocked, but to be honest, we all understand the system that we live in, right? Capitalism is a great tool, great model, but at the end of the day, there definitely exists certain evils within it when you consider it.
Oh yeah, no, I think, but oh man, that could have been another great sell-off opportunity to catch too.
Yeah.
Because it's been basically happening from the peak of yesterday at around what's 1810 military time.
610.
610, yeah. So it looks like that can't be right. 1800 hours? Because it was during market. That's when it peaked, and then it sold heavy in pre-market today, and now it's selling off in after hours. It's
Yeah.
down 2%, almost 3% now.
They definitely knew that was coming, right? Somebody knew that was coming.
Some, especially in that pre-market move right there, Jesus.
What's
Because that thing dropped.
ridiculous too is you look at this drop from back in April, so just a month ago, to the bottom. It's down 57% overall.
Ugh, that's got to be a kick in the
That's
balls.
nuts. That is nuts how much that's dropped, right?
Like, I don't. How do you recover? Like,
So
that's it.
it's interesting though. So it's very possible. I would even say though, this little drop that we have, it's possible it's going to bounce back up around in this range.
Yeah.
Even though you have to remember there's a lot of these hit pieces out against it. I'm sure it's gonna recover a little bit. You know, people are gonna be, well, it's still this huge company. They're gonna make adjustments. They're still gonna make their money. They're still gonna figure it out. Another hit piece has come out. It's gonna tank again, and it's gonna get bought up. We got to look for it. Are there gonna be huge volume spikes near the bottom of this little box that I've drawn? If it keeps on getting snatched up in this 250 range, there's a possibility we're going to see some sort of accumulation phase of this. Keep in mind their PE ratio here is at 13. So, in terms of, if you ignore the news, in terms of, is it a company that's still going to make that money? Yes, the news that's coming out, is it going to ultimately affect their bottom line? If not, at the end of the day, they continue to make that money, it's still going to head back up, regardless of whether you like it or not. That's just how that system works, right? Los says, I think they'll get some recovery. The value for them at that price is really good. Now, if that investigation turns bad, they'll be at 203 months. Yep, totally agreed, right? If that
Yeah.
investigation comes out with something and people truly do have, boycotts, or, the public is infuriated with it, that could lead into additional things. So, yeah, I mean, I will say there's that possibility we'll see some headline news in these next few months of acquisitions, certain things in terms of you always hear these things in terms of fraud and people doing the wrong types of things, but that's also um, yeah, they also have 400,000 employees with 401ks that will consistently be buying shares as well. Yeah, so there's support in terms of purchasing for that company down the line, but we got to see how it deals with that type of news as things go on. But it's definitely in a fear stage, and the breakdown of it very significant. Stock going down 57, almost 57, almost 60%. So
I don't know how you make that sound good.
well, there's still a market capitalization of $274 billion. So they've,
Since healthcare.
yeah, right.
Oh man, it's a necessary evil, unfortunately.
Yep, that's what it is.
Almost down 4% as we've been talking about it.
Yeah, I expect it to get a little bit worse tomorrow, but if it's one of those things, if it's gonna drop down toward this 250 range, keep an eye out for volume to see if there's buying. That might be a nice bounce coming back up for it too. So
I like 255 for a bounce.
yeah, I agree.
It's like 255 to 252, but I don't see it. If it breaks below 252, I think that's when it can get really, really ugly.
Yeah, definitely. All right, those of you guys that are in our YouTube chat, YouTube live, man, when Max and I first started talking about this, we said we're gonna do like a 15-minute to 30-minute type of chat, and every single one of our live sessions has turned into almost an hour and a half. This one's gone on for about 72 minutes so far, but the last couple, this is only our fourth episode so far. I'm having a great time. I know Max has said he's enjoyed it too. If you guys here are still in the chat, leave us a comment Stacks. If you're watching this afterwards, go ahead and comment too. We're always monitoring our comments, and let us know if there's certain things you want to see during these live sessions. For those of you that haven't used Stacks just yet, want to try it out, we do have a code 130, that's ONE, the number 30. You can use that on Stacks. Go to investorcentralclub.com/memberships, sign up for an account, and use that code to access what we have for $30 for that first month. Keep in mind too, I just uploaded yesterday, if you go to our YouTube channel, I just uploaded a brand new fresh how to use Stacks video We did just get an update to our interface. Oop, let me fix that for you. Right down here. We got a new update here. If you wanted to filter, before you could just filter for the day and filter for the week. If you want to filter, let's filter for today. We can hit equals 21, so today, and get all the data for today. Our call and put ratio gets adjusted. Flow scanner gets adjusted. So you can see it was very bearish for SPY, IWM, QQQ today. If you want to as well, we can go ahead now and create a full range. So if I just want the month of May, I can go and highlight that now and get everything for the month of May, including the flow scanner. Keep that in mind. So you'll see Tesla in the month of May had a huge call to put ratio, calls 575 million calls to 92 million puts. Just additional tools. We're always trying to evolve. We're always trying to get your guys' input to see what's going on with, with the usage of our software, things we can improve, things that we can also tools that we can create so that we can be better traders and help you guys profit. Another thing you may have noticed, Wave X, something we've got in development, will be coming to us very soon this summer. Keep an eye out for it. We definitely will be letting you guys know as soon as it is released. We're still doing some final testing on it to make sure things work the way that we need it to. It is going to be a very useful tool for those, especially for those day traders that want to get an idea what's going on in the markets. Last but not least, too, I just saw this earlier today. Club profits. It's always nice to go in here. Let me move our video here just a little bit so you guys can see. Somebody just made 14K today. All right, MoFlow, 14K in just a single day. Pretty crazy. A lot of people using stacks are using it to, supplement their trading. Some of them are using it to learn about trading. We've got our education videos being posted. Max over here in TG Trades does not only daily reviews, but he also has breakdowns that you guys can follow. We do have his Substack also linked below in the description box of our YouTube, so please don't hesitate. Go ahead and sign up for it. There's a free version where you'll get the emails, you'll get the notifications of what's going on. And if you do want to become a paid member, it's only, I think, $5 a month if you want some additional information. Max here does an amazing job of helping you navigate through these crazy, crazy times. In addition, we also have a breaking news channel. If you're not following us on X, if you're not in the Discord directly, but you are a part of our Stacks interface, you also get these updates as you go on throughout the day. So anything related to our big companies, anything related to the markets, we like to make sure that we have a bot here that helps us keep up to date as to what's going on. Also here, earnings. You guys saw that earnings image that I put up earlier, but you guys will get updates weekly in terms of what is coming up in earnings, so you can make sure that you keep an eye out on those during the week in case something unusual comes in on Stacks. You guys can get in on those profits that are coming up. So don't forget, we've got that Discord link in there. And yeah. Anything else? Let me see. Let me put this up. If you got questions, help@investorcentralclub.com. We're always here to help out. If you have any issues with our software, if you have issues signing up, if you've just got questions that you want to send to us and you're a little too shy to leave it in the YouTube chat, you can go ahead and let us know. In addition, we've got a Samtrans advertisement out on the buses in the San Francisco area. If you guys do happen to see one, go take a picture. Please be careful. If you're driving, don't put yourself in danger for a picture, but grab a picture of it. Follow us on Instagram, Investor Central Club and Stacks AI. Go ahead and share and tag the picture, and we'll be in touch with you to send you a little gift for doing so. And yeah, that's what we've got for you guys. That's our weekly show for you guys. I'm Eric, also known as Eru in our Discord. You've got Max here, Unusual Markets / Trades and Gains. If you made it all the way to the end, go ahead and leave us a comment. Leave us a comment of stacks if you can. We're always happy to do this for you guys. We will see you guys next week, Wednesday. We'll try to get on about 30 minutes before market close. Sometimes it's going to vary just a tiny little bit, but we're trying to, it was 15 minutes before market close. We're going to give you guys a little bit more time to do our earnings analysis to potentially get into some positions for overnight.
Yeah.
But yeah, we'll see you guys next week. You guys have a great rest of your day, and happy trading to you guys.